Today is day 9 of Follow Me on BNB. It is following textbook Elliott Wave and Fibonacci. Today we're going to focus on how do we manage our position on the larger degree because we have a textbook ABC correction as anticipated. So you want to really see the finer details of how to manage your position. So that's going to be the focus of today's video. Like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive into BNB. So yesterday's video, again, we said BNB day 8 of follow the Binance coin with locked-in profits was what likely to happen. So what we said yesterday, and again, we're following on a daily and an hourly chart for the purpose of this video or this series. We should anticipate some type of A, B, C style correction. If we get that, we want to adjust our stop to this low if we get a movement to the downside. So that's what we're waiting for. That's what we're anticipating. So now let's just dive into a live chart with Binance coin and check this out. So look at this. We was anticipating the ABC and it's just unfolding textbook style. We've adjusted it slightly, but what we can see is the market made a 5-wave move to the downside and then an A, B, C correction with a follow through to the downside. So we're going to do a couple of things here. There's a couple of Fibonacci time, or this particular thing, it's called a low to high. Now, this is a maximum, more often than not, very reliable maximum of a correction. And you can see it's just a few hours away from this high over here. This has also gone up, down, up as an ABC. But look at these little swings, very impulsive on the way up. But the price has gone below this swing and has overlapped into the wave A. What that does for us, it tells us that this is now a very highly probable ABC and this wave C should hold. Why is that relevant to us? Okay, it's going to help us manage our position in a very objective manner. So if you've been watching the last, I guess today's day 9. Today's day 9, so it's the last 9 days, including today, of the Follow Me on BNB. Just a quick synopsis. We went short on this low over here. We had an initial stop loss over here. The market moved nicely to the downside. This was our first half of our position, exited on this swing high. So it's exited over here. So now we're risk-free and locked in profits. We've also moved our stop loss on the second half over here. But what we're going to do today is very powerful and very important for you traders is this stop loss that's far away from the market. We are now going to move it all the way down to this point here. Why? Well, the reason, because we want to make this logical, mechanical, so we can repeat the process over and over again in a non-emotional way, is basically what should the market not do if the trend is to unfold as anticipated. So the trend as anticipated, what we're really being patient for is really a bigger degree movement to the downside. So we're talking about a move down, a correction, a big move down. We're expecting this to be an aggressive wave 3 on the downside, and that's showing signs of this. So don't be too surprised if we break this low over here, it just falls really steep. Some other correction and then another movement to the downside. Well, after a 5-wave movement, we normally see a 3-wave ABC zigzag as a minimum and then a continuation. So if this is the top of an ABC zigzag over here, then we've got no reason to have our stop any further than this high over here. So what we can now do is take this stop loss. Obviously, you need to edit this in whatever platform you'll be using. On a side note, what would be another good short entry? Now, I missed this because this is the problem with hourly charts. You know, the data unfolds as you're sleeping. So this swing low over here was 6 p.m. or 5 p.m. last night. And over here, this would have been another good shorting opportunity where you can go short and put your stop loss over here. Go short below this point and stop loss over here. And that's another way to compound or add a whole new position and manage it in the same way. So your first half will be in profit and then you can add to the position because it looks likely we're going to get further downside movement. So let's just do some numbers on this now. I'm going to do two parts to the equation. I'm going to just grab this over here. I'm going to do a couple of things. Because, some people love numbers, some people hate numbers. And ideally, you want to have some tools that make this part easier. So the first half of our position, let's just do some math. Let's just say your portfolio size is 100,000 for simplicity. We're risking 3%. The first half, so we can divide it by 2 into 2 halves. We got 1,500. The first half of our position, we exited at a 4 times multiple in terms of profit. So we would have made 6,000 profit, 6% net profit, right? And now what we've done with our second position, we've now actually locked in, because we moved our stop loss. We've locked in this profit over here for this part of the position. We've locked in, let's just call it 3, right? 3 times multiple. So it's 1,500 times 3. So we've now locked in a further 4,500 plus the 6,000 divided by the initial starting capital. We're locked in 10.5%, which is really significant for an entire portfolio. But we're not done yet. We're not done. This is now just capital preservation, risk management, trade management, where we've moved the second stop loss. Hopefully this is making sense. We went from over here, moved it to break even, and now we've got a logical point to move it here because it looks like an ABC correction. All right, so if this is an ABC, what should we anticipate next? And we're just using pure, really 3 main things. Well, 4 now is momentum, pattern price, and time, right? Before we just go on to the next bit, let's just have a quick glance in the top right-hand corner, which is our daily chart. We can see that the momentum is still bearish. The momentum over here is still sideways to down. So we probably still got 2, 3, maybe 4 days of sideways to down movement, which is healthy for a short position, right? So we're short on this right now. All right, so what should we do next? Okay, so what's the next price target that we're going to anticipate with this? All right, well, if this is a movement to the downside, and I'm actually going to call this a wave 1. We're just getting really, really focused here. This is a wave 1. What looks like to be a wave 1. You may agree, may disagree, but let's just say we got reason to believe it's a wave 1. We've got reason to believe this is a wave 2. If that's the case, we should anticipate a wave 3. So what do most typical wave 3s do? Well, 1.618 of wave 1. So we're going to, by the way, I covered that quite fast. I said that quite fast. I've actually got an Elliott Wave and Fibonacci masterclass that covers wave structures and the key Fibonacci ratios to those wave structures. And we're just about to do it right now. But in the masterclass, in the link below, you can take the masterclass. You can pause the video, take the masterclass. It's short and sweet, but it covers the high-level stuff on Elliott waves, Fibonacci, the key things that you really, really want to know and how to apply it. We're going to apply one of those right now, but this is in the link below and you'll get instant access. So one of the key ratios is 1.618. So we're going to measure this wave 1 and we're going to project it from the high of this wave 2, what looks like to be a wave 2. And the key ratios that we want, there's 2 main ones. There's 1.618 and there's 2.618. They're the 2 we're going to look at. Now with this 2, it hasn't been confirmed yet, so I'd like to put a question mark to say we need the price to go below this wave B and ideally below this wave 1, and that will confirm that wave 2. But it's looking likely, not guaranteed, but looking likely. So where are these lines that we just drew? All right, well, they're right the way down here, right the way down here. If I just zoom in like this, let's just focus on the 1.618. So it's likely that the market is going to hit this zone over here, $239, which is very significant to the downside if this plays out. If this plays out like this, when we're looking at our profit levels, because we're going to be adjusting our stop loss at logical places. Let me just do this. On our second position, if it plays out. Again, the great thing right now in this current trade is that we're risk-free and we're guaranteed profit. We've made 10.5% on the entire portfolio in a few days, which is very, very healthy. very healthy. But the fat lady's not singing, so we're still in this trade. So if it does unfold to this level, it'll be 13.5 times profit. Just to give you a feel, so we risk 1500 for the second position, and times 13.5 would mean 20,250 plus the 6,000 that we've already locked in net profit. So this will be 26%, 26% if this plays out this way, right? Which is, if you go by how much we risked 3,000 at the beginning. So it's an 8.7 times risk. So we risked 3,000 and we're making 8.7 times net profit, right? Hopefully that makes sense. So what do we need to do now? Well, there's no other action. So we've done the hard part, but we're trying to keep it very, very cool, calm, collected, logical. We don't need to get ahead of ourselves, because the mistake that a lot of people make is they'll start taking manual profits here because it's significant. And it might end up being a good decision if the market does this, but we don't know if it's going to do this. We can only go with the probability. The momentum's down. The pattern has been a very corrective pattern. Let's look at this. It looks like a very clean A, B, C of a wave, what looks like a wave 2 of some sort. We have traded back into the range over here. So we've got no reason to believe other than that this should unfold. It's highly probable. But what shouldn't happen in the process of this unfolding, well, the price should not go above this. If it does, then it voids the count and then we get stopped out. Now, it might end up being some type of complex correction, but then we want to look at a few other factors if that occurs. But right now it's looking quite impulsive to the downside in terms of this movement here. So we've got nothing else really to do. So we're following this day by day. Today's day 9 and it's literally unfolding day by day. But this has just been a textbook example of a beautiful 1, 2, 3, 4, 5 wave structure, Elliott waves. And then we've got a nice A, B, C correction. We went short in a logical manner. We had a stop loss at a logical place. We've adjusted our stop loss, took profits as our insurance, just in case we're wrong. And we've been patient. This is the hardest thing. Being patient for the second position, which was at break even, to now move the stop loss over here. And now we're just managing our position professionally. Professionally, slow, steady, one thing a day. We don't need to watch the market every single moment of the day. So there you have it. So if you like today's content, like, subscribe, hit the bell notification. Take the Fibonacci and Elliott Wave Masterclass. It's in the link below. I cover this in a lot of depth. And I'm going to have a few more new things for people that have got my course. We're going to be launching some stuff more in detail on Fibonacci time as well, because if you can get the time retracements and the time extensions and some of those rhythm zones we did today, they can give us valuable information in conjunction with momentum, pattern, price, and time as well. So BNB, what do you think? It's unfolding really, really nicely to the downside. Are we going to see it go below and towards that 240 mark? And is that going to be the low? Well, let's see how it unfolds and we'll follow it step by step. So tomorrow is going to be day 10. Jeez, it's been 10 days. And this has really just been a good exercise just to see how it unfolds and what you would actually do as a trader day by day, the things you'll need to do when you're managing your position and what it takes, and to not rush. That's going to be the key thing as well. All right, let's finish on a quote. I want to go with, I think it's this one. I think it's chapter 8. Let's go with 8. Yeah, this one. All right, Henry Ford. It has been my observation that most people get ahead during the time that others waste. It's been my observation, Henry Ford said, that most people get ahead during the time that others waste. So you got a great opportunity here, which is to really learn what we're learning, which you're literally applying to Binance Coin, the details, the finer details. But you can see it's relatively simple once we look at it objectively. Momentum is in the direction on 2 time frames. We did daily and hourly. Okay, 1. We got pattern position. So there was a particular ABC correction, and now we've had a 5-way sequence to the downside, another ABC correction. So we've got nice patterns unfolding. We've got Fibonacci price, the key ratios between certain waves, and we're now also using Fibonacci time. So it's very simple. We're looking at these 4 things, but it does take practice. So take the masterclass, start really learning. And if you've taken it before, I'll take it again just to really, really loop it and drill down some of these key points, because you'll see these patterns unfold time and time again. All right, I'll see you tomorrow for day number 10. Let's see if BNB does unfold to that wave 3 to the downside. Is it going to be a steep drop? Well, if it breaks that recent low, more than likely. But again, we have only so much control of what we can do. Everything else is probabilities, never certainties. But then we can have control of our risk management, our entry strategy, and our analysis. All right, I'll see you tomorrow for day 10 of BNB. All right, see you soon.